Welcome back, everybody. It's time to look for new positions and track some more transactions, so let's get right to it. Okay, here we are back on SoFi, the Wheel Series. This is part two, and we are setting here in the virtual on-demand setting about 10 minutes prior to that Friday's market close. Let me go and just collapse that real quick. Let me fast forward this so you can get to it. But we basically had sold a cash secured put for 1450, and we were just waiting to see if I mean, obviously you can see the 1450s up here, so the chances of it closing in the money are really high because you only got like what 30 seconds left. um so let's just hang out for a second. I'll speed this up a little bit, and almost, we got 10 more seconds left. And there we go. So the market's closed now effectively in this virtual world. So it closed at 1409. So our cash secured put for 1450 would have been assigned. And we've actually already simulated that by buying 100 shares, because on demand doesn't treat option expiration the same way as the real account does. It'll automatically assign it, and it doesn't automatically assign it in the on demand. So we had to virtually buy some to simulate that. But over in the web application, so here we are back on the web application over on the cost basis page. The SoFi ticker is the only one we have, so it already selected that. But what we need to do is we need to basically record that assignment in the web application. So over here, you find the cash secured put. It's only one here, so it's pretty easy to find. The result is assigned, and when you click assigned, it'll bring up the assignment details here. We are doing this virtually, so we need to change this date back to when it actually happened, which would have been the assignment happens over the weekend, so you can actually just put it on the 16th or the 15th. We'll just put the 16th for now. It would be a buy to open. Stock is 100 shares because it's one contract. The assignment price would have been the strike price, which was 1450, so it would have cost us $1,450. And we'll go ahead and click submit. When you click submit, it'll add it to this stock section, so that'll be bumped up to 1. So I bumped it up to, or submitted it, so you can see it bumped it up to 1. And now this put option is effectively done. We don't need it anymore, so we can go and delete it. And that cleans that up. And you can see the stock is right here. And then if we come up to the summary, you can see we have 100 shares owned. And this warning thing is actually telling you that there's 100 shares not covered by STO calls, which is basically, it's a warning telling you that you have stock position that is not, you're not selling any covered calls, so there's like a missed opportunity here. It's just letting you know that you have some shares that are uncovered, meaning you could sell covered calls on them. That's just the gist of what it's saying there. The stock value, and that's kind of interesting, the stock cost is 0. I think it's 0 because we need to come off of this screen and then come back to it. Let me try it real quick. Oh, interesting. I'm stuck. Oh, I know what this is. See, we did that transaction back here where we did that, but remember how I told you there's two parts, position and the transaction? Well, we forgot to record the transaction. So obviously it says there's something not right here. And that's also why the cost is showing 0. So if we click save here, that'll just create this proposed record again. And the commissions and fees usually on an assignment is 0 in Schwab. So 1450, we need to move it down to the add new transaction, add here, and there. Now we got the transaction history. Now everything is going to look like much better now. So yeah, now we have a cost. And now I think if I go over to dashboard, that won't, yep, the warning message goes away too. So anyway, some indicators to show you that there was a problem and how and what you need to do to fix it. The funny thing about it is, back on the dashboard, that original warning, it had a link in there. If you clicked that, it would have taken you to the reconciliation screens here, and it would have walked you through how to add that transaction in and fix this issue. But you could also fix it the way we just did it, because we knew what we messed up. All right, moving on. So yeah, the cost basis with premium is a little bit cheaper. As you can see, we own 100 shares, but we've already received 51.49. So our cost basis with premium is actually only $13.99 a share. And the cost basis with just the stock purchases is $14.50. So now that we own 100 shares, we need to go back over to Thinkorswim and simulate the following Monday. So let's go ahead and just do that. We're setting on the 13th. We'll treat this as if we're waking up on the 16th and the market is just about to open. We'll just put it at 55. There we go. So 5 seconds before the market open. And it should be playing. I think it is. See here, 55. Oh, there it goes. Okay. It had to load it. All right. So we own 100 shares. Our cost basis is at 1450. So that would be the target strike that we're looking for to get out of this break even, but keep all of our option premium. So there it goes. It opened up at 1430. And the reason why we wait till market open is because, I mean, what if it opened at 1490 or something? We could still sell a covered call at 1450, but in that instance, we might want to target $15 instead. Maybe, you know, it's up to each investor's own discretion of where they want to go. The important part is to make sure we don't sell it for below our cost basis because we don't want to lose any money. In part 3, we will look to sell a covered call on our positions that we now own and also sell a cash secured put to play both sides. So stay tuned till then. I want to thank you for watching. Like and subscribe if you haven't already, and go out today to MyATMM.com and get your free account so you can start tracking your own transactions. Thanks, and I'll see you in the next one.